Well, hello, you're with us here on BTTV. I'm Abha Bakaya. Let's take a look at how markets are doing today. Well, clearly, as you can see from your screen, looking a little dismal this Monday. Deepan Mehta is also joining us, and we'll talk to him about it in just a moment. But quick look, Sensex down 500 points as we speak. Nifty 18162 is where we're at right now. IT, energy, oil and gas, some of these pockets, that's where we're seeing the decline at this point of time. And overall as well, we've got, again, China COVID worries, dollar continues to rise as well. A couple of these factors perhaps playing in at this point of time. And we'll talk to our market experts a little bit more on what else could be spooking the markets and how long this profit booking is likely to continue. So let me welcome in Deepan Mehta. Deepan, everyone was really, feeling good about the fact that markets have shown so much resilience. Domestic factors, domestic participants have been in play. But the last 10 odd days or so, we have seen constant, maybe treading water, slight negative bias, profit booking. So which way do you really feel we're going to go from here on?
Yeah, good afternoon. Thanks for having me on your show. I think what we are seeing is a mild sideways correction on
Okay.
consolidation after market has outperformed the way it has the other global markets. It's taking a bit of a pause at this point of time, but broadly, I would say that next few weeks, months, and quarters look very interesting and very positive for equities on the whole. And if there is no further bad news on the global front, and if those markets, commodity as well as international equity and debt markets, if they stabilize around these levels, then I think that our market should do exceedingly well. And once we get into the new year, which is typically the best period for Indian equities, December to Jan period, then we could see the markets easily scale to new highs. So these are great times for investors, and we've always advocated long-term investing, and I think it's paid off big time over the past few years or so.
Absolutely, Deepan. I'm just taking a look. Reliance Industries down 2%. Incidentally, Isha Mani has had her twins, so we do have that good news in the family there, just as an aside. But on the upside, we've also got names like a Bharti, etc. I'm just taking a look at the broader markets as well. Bank of Maharashtra has been a constant mover. With all this buzz around banks, Deepan, and we're seeing Bank of Maharashtra as one of the few that has seen consistent buying of late. Do you feel that that's buying coming in at lower levels across, everything looking good in the banking pack, or are you actually bullish on the opportunity here, perhaps?
I think we're very positive on banks and NBFCs, more with the case with banks because they're able
Yeah.
to raise resources at low interest rates through current and savings account. And these are great times for banking companies because the new NPA cycle has not started, thankfully. So credit costs are low. And I think we are seeing a cyclical upswing in the economy as well, which is why demand for credit is excellent. So you have a situation where all the bank stocks are running on all three engines, that being higher net interest income, higher fee-based income because of new loan approvals, and costs are low because the NPAs have not yet risen as much. And a lot of the legacy NPAs also, their recoveries are taking place over there. So keeping all of that in mind, I think banks should do very well. And if you expect to beat the Sensex or Nifty, then you need to have at least 35-40% of your portfolio on the banks. And there's so much of choice over there. There are the large private sector banks, the likes of HDFC, Axis Bank, Kotak, Axis Bank. I think those are great long-term secular plays. And there are a lot of trading opportunities in some of the PSU banks, as well as the tier two banks as well, where there's scope for price to earnings or price to book also to get re-rated upwards. At the same time, I think earnings momentum remains pretty much strong for all the companies in the sector.
Okay, what else is, looking attractive to you? We still have some downgrades coming in, Dipan, if I just take a look at some of the news flow today and even otherwise on India's growth numbers. But are you worried? And, what else are you counting on rebounding at this point of time or continuing to grow? We've seen earnings season close and it's looked pretty decent so far, but in the coming quarters?
Yeah, I think it's been a good earnings season, and we spoke about banks and other two sectors which come to mind, which seem to be on a very solid wicket, is of course auto and then the capital goods companies or engineering construction companies. I think if you look at the numbers which came through from all the companies in these two sectors, I think they did exceptionally well, and they're seeing good growth momentum. In the case of automobiles, most auto companies are sitting on very good order book position or bookings as well. And next 2, 3 quarters look excellent for them. Some of the challenges as regards supply chain, increase in inflation and material costs, I think those are all more or less over and done with. And they're all launching premium models whereby they're able to get higher realization. So that's one thing very positive going for the auto sector. When it comes to engineering, construction, or capital goods companies across the board, I think they're sitting on huge order book position. We are clearly seeing a revival in the capex cycle, and that augurs very well for the sector as a whole. Companies like Larsen and Toubro, ITD Cementation, even engineering companies like, say, Praj Industries, ISGEC, all these companies are doing Triveni Turbines. I think they're doing exceptionally well because of bulging order book position. And so these two sectors, apart from banks, also look quite interesting. But frankly, I think across the board, we are seeing very good traction in the corporate sector. With the exception of commodities and energy companies, we are by and large bullish on most sectors.
Amazing. Okay, that's sounding so positive, Dipan. Always something we like to hear. Let's take a look at what else is buzzing today. Let's see if Tanya's ready. And we can go across to her and get a sense of what else is catching our eye in today's session specifically. Tanya?
Absolutely, Abba. Let's start with some of the gainers first. So shares of Bharti Airtel were up to by over 2% today. Now, Morgan Stanley in its recent report said that it has an overweight call on Bharti Airtel with a target price of 825 rupees on its shares. Other than that, Indian Energy Exchange, the shares were up by over 5% in an otherwise weak market today. Now, the company announced that it will consider a buyback proposal on coming Friday, that is 25th of November. Shares of Easy Trip Planners also surged over 20% today as the script turned X-split and X-bonus. So the script went X-split from face value of 2 rupees to 1 each, and also it also turned X-bonus in the ratio 3:1. Then, of course, shares of Escorts, Kubota were also up by over 7% as brokerages gave thumbs up to the company's medium-term business plan post-analyst meet and a plant visit at Faridabad facility. Now, experts believe that Escorts has intensified its focus on comprehensive growth across its business verticals. On the flip side, we have Zomato. Shares were down by over 4% today as the company said that its co-founder Mohit Gupta has resigned from the company. Also, sentiments around the stock also turned weak amid reports that the company is planning to lay off 4% of its workforce to cut costs and turn profitable. The stock is down over 50% in 2022 so far. Also, Nykaa shares were also down by over 4% in the afternoon trading session. Now, as per the data from the National Stock Exchange, private equity player TPG Growth has offloaded 5 crore shares of Nykaa at 184 rupees in a block deal. Now, remember, ever since the company's pre-IPO lock-in period, investors have been diluting their stakes. Apart from these stocks, shares of heavyweights like Reliance, TCS, and HDFC were also down to the tune of 2% today. Back to you.
Okay, Dipan, what's your take on Bharti Airtel right now?
Yeah, again, another sector we're very positive on. And balance sheet is in great shape. There were risks around 5G implementation and what capital cost would come around there. But those have been very well addressed by the management. And there are adequate cash flow to support the investment in 5G. And as in when 5G is rolled out, you will see a distinct improvement in their average realization per unit as well. And it's about time that a general ARPU increase or a tariff increase should be implemented, and that could be a trigger for a further up move. Costs are more or less now stable. It's a business with high operating leverage. So as and when they have higher revenues, a lot of it flows to the bottom line. And now with consolidation process over and done with, I think that both companies, the larger ones, that's Jio as well as Bharti, have very good prospects and they could be steady in terms of compounding their earnings.
All right, fair enough. So that's the take there coming in on Bharti Airtel. Let's go across to Sakshi as well. We've got Ease My Trip in the news as you've been watching on your screens. It's zoomed as it's gone X-split, X-bonus today. Sakshi, talk us through all the latest there.
Absolutely, Abba, you're right. The share hit its upper circuit of 20% in the intraday trade today. Remember, Ease My Trip is one of India's largest online travel platforms in terms of air ticket bookings, hotels, and also, holiday packages, rail and bus tickets as well. Now, rightly you pointed out that the sharp move has come in after the stock has turned ex-bonus and ex-split today, which means that investors who've had this stock before today will get the benefit of the bonus and the split as well. Remember, the company has announced a 3:1 bonus, which means that for the company will be giving three bonus shares or additional shares or free shares for every one share held to the investors. Also, the 1:1 stock split means that one additional share will also be issued. Like I said, first, if a person has had one stock of EasyMyTrip in their portfolio, they will now become two slots. Also, when we talk about the face value, that is getting reduced to 1 rupees as well. Remember, the company also reported very strong numbers in Q2 as well. When we talk about the profit after tax of 28.2 crores, that was up by 4%. Of course, there's a recorded gross booking revenue of 1978 crore rupees. The company is also looking at its international expansion, also looking at how it is going to grow inorganically. The company has already, explored some two already inorganic expansions in this last 7 to 8 months odd as well. So that's been another positive. As far as the brokerage houses are concerned, they are quite positive on the stock movement, even going forward from here. So we do have brokerage houses that have an upside limit potential that they look at of 20% to 30% on the stock. Some believe the stock can actually move up to 63 rupees. Some also have pointed out at 75 rupees per share, like Edelweiss Wealth Research has a buy rating on the stock with a 75.3 rupees per share. So from the earlier levels as well. So there's a move on the upside that you can expect going forward from here too.
All right, thanks for that. All right, let's take a look at some of the other buckets. Adipan, we've all been talking about how the only spoilsport could potentially be crude. But when it comes to the commodity side of the market, particularly crude, and then, of course, what we're also witnessing on some of the other baskets with regards to global prices, what would be your strategy there? Is that a space you would avoid, watch closely? Are you concerned?
Oh, I think gradually all the challenges in the global markets have been discounted.
Okay.
Of course, if the oil spikes to 130, $140, that's not something we are expecting. Or if there's a meltdown in some organization or sovereign debt crisis because of the prevailing situation, the global debt market, that's not factored in. But by and large, I think concerns around inflation, rising interest rates, and the war in Europe, I think those are more or less discounted and priced into stocks. And unless there's any further negative news, I think we are pretty much in decent terrain over here as far as negative news flow from overseas is concerned. We are seeing FPIs turn net positive as well, and that's really very, very good sign that money is flowing back into India. And you must have noticed that as and when, whenever they're investing on those days, we see a very decent up move in stock prices as well. Because at the end of the day, there's not much supply available for them to absorb, for them to buy in our markets as well. So on the whole, I think, as I said earlier also, we are seeing a very good bull market underway. We have a strong foundation in place, and it's only a matter of time before we build on these gains.
Okay, fair enough. Anything you like from the pharma pack, Deepan? I'm just curious where pharma lies in the otherwise very ebullient, optimistic market. They seem to be a little less in favor, but there isn't a case not to be invested in pharma either.
Yeah, it's a very important industry, and some amount of allocation has to be made to pharma. With usual disclosure that we and our clients are invested, we like the India's largest pharma company, that's Sun Pharmaceutical. It has followed a slightly different strategy as far as some of the other pharma companies, where it is focusing on specialty products, and those are shaped up very well. At the same time, it's going very aggressive in the Indian market as well, and not so much as far as US generics is concerned. So I think they are a bit ahead of the curve, better than some other peer group companies, and valuations also are reasonable. But you should expect some amount of volatility in earnings. But that notwithstanding, I think this company should do pretty well over the next 2-3 years or so. It's a great long-term investment and a stable cash-generating company. Apart from that, if you have a penchant for going in for stocks which are beaten down, then you could look at Gland Pharma as well. It's a quality player as it comes to injectables. It's just that because of issues relating to parent company as well as additional costs and some other product-related issues, the company's performance for the last 2 quarters has been a bit disappointing. But it's a great player, and I'm sure that it will turn around pretty quickly in the next 2-3 quarters or so. Again, a disclosure that we and our clients are invested.
All right. So, Deepan, we've been chatting for years. So, I want to just ask you now some completely out of the box questions. We've been tracking the markets, the up and down, and whether it's going to survive. But have you, in your time, Deepan, seen the kind of move that we've seen in the last few months and in fact, since the peaks during COVID, do you feel it is a new era for people that are looking to invest in Indian equities? For the domestic investor, for the retail investor, is it really one of the safest assets right now? If you go about it wisely, how are you looking at Indian equities in the current environment?
Well, I think all our patience and faith in Indian equities and in India as a country certainly has paid off, and that too paid off really well over the last 2, 3 years or so. And in the past, whenever there have been global crises, we would have been amongst the worst performing market, underperformed even some of the global markets. But it's not the situation this time. Go back to 2000 when there was a meltdown in Nasdaq, and 2008 after the Lehman Brothers crisis. I think we did exceptionally badly. But this time around, when there is there's so many challenges in the global market, we have a geopolitical event as well, and yet our markets are at all times high and really outperform most global markets, in large part to resilience when it comes to earnings and a lot of liquidity coming into our markets from retail investors. I think I haven't ever seen this kind of situation in the last 30, 35 years that I've been in the market. And we just hope that this particular trend, this virtuous circle, keeps on going up higher and continues. And hopefully, I think we should see very good returns. I think last 12-month returns have not been that great, but next 2, 3 years returns should be exceptionally good. And investors who have patiently invested in the last year or so, they should get rewarded very well. And I think the more gains you make, the more attraction it is there. It attracts more and more retail investors. And still, what amount of retail money which has come into our market is a small fraction of the total investable pool. So I'm quite positive on Indian equities for the next 3 to 5 years. It has to be a must-own asset class in every household.
Okay, and if I had to push you for, your top 3 picks, it's okay. We don't, all disclaimers intact, and I know we don't always get super stock specific, but just, 3 stocks that let's say have positively surprised you post earnings, post all the roller coasters that we've seen in the last few weeks and months.
Again, a disclosure here that we and our clients may be invested, but we spoke about banks, and
Yeah.
HDFC Bank has been a major underperformer. A lot of uncertainty around merger with HDFC, but I think that eventually all of those uncertainties are being gradually addressed, and you could see a super outperformance in HDFC Bank once the actual merger takes place or around that point of time. We also spoke about capital goods companies, and I was very impressed with Larsen and Toubro's financial report for the September quarter, sitting on very huge order book position, very much focused on return on capital and improving the operating profit margin. Fabulous value has been created in the subsidiaries as well. So that's the second pick that we're very positive on. And lastly, I think we're very positive on Eicher Motors. And it's perhaps the only two-wheeler company that we are positive on, considering how much disruption is taking place in the scooter and the two-wheeler EV space. But Eicher Motors, I think, is in different orbit altogether, and its focus on premium bikes, on leisure biking, and the kind of export opportunity which is there for the company is quite phenomenal. It's available at reasonable valuations, and we could see consistency coming from the performance for the next 2, 3 years as well. Capacity constraints are now behind the company. And again, the new models have done exceptionally well, and they're sitting on good order booking as well. So I would look at these 3 companies. But as I said, I think these are all long-term investments, and one should have a 3 to 5 year type of a view to make very decent returns in these companies.
All right, Deepan, thanks so much for joining us. Always a pleasure speaking with you and going through some of the twists and turns that we are seeing in the markets. Now, today, of course, the day has been a little tepid. A little bit of sideways profit booking is what Deepan coined it as. Let's take a look at the top gainers and losers for you. And top of the charts, I think we had names that did manage to stand out. Your likes of your BPCL, Bharti Airtel, Axis Bank, for example. Bring up a few others for you as well and take a look there. But I think on the downside, and I think a little bit more of focus on perhaps what was lagging, Reliance, of course, put a bit of pressure on the index today. TCS, HDFC Bank, Infi, so a lot of those heavyweights, SBI. We had ITC also cool off a touch, Bajaj Finance. So, you know, it really is some of the financials also that have been seeing steady profit booking now the last week, 10 days or so. Tech Mahindra, Tata Steel, Dr. Reddy, some of the other names, IT also definitely cooling off today. Wipro, another one from that pack there. So in the broader markets, if we take a quick look, we did have a fair few that managed to see some amount of traction coming in today, the likes of PNB, NMDC, Central Bank, IOB, IDBI Bank. So a lot of the, you know, banking or financial names were in the broader markets did manage to still do well. Other than that, we also had stocks like Bank of Maharashtra, some of the hotel stocks. For instance, I'm just seeing a lot of banks on my screen actually right now. But there were a few others as well. Chalet Hotels was up 3%, Inox Leisure, for instance, then a Radico Khaitan, a couple of the other names, Dish TV. Some of these did manage to see some amount of gains coming in. So it was pretty clear. I think the pressure is coming in more on the index. And you're seeing a Sensex down over 500 points today, but more like a sideways profit booking, still not you know, any kind of selling pressure, so as to say that we'd call it, but a natural settling after the kind of gains and recent highs that we have seen. That's where we're going to close on today's show, but do stay tuned. Lots more action coming up.